that the recorder has been started, and then we can start with a very interesting topic. Good. The recorder has been started today. Yes, welcome at first, and good evening to everyone. The webinar. Yes, hi, Matthias, of course, as well, Matthias.
Hello.
Good. Today we have got a very interesting topic: intermediate and advanced chart patterns. I want to give you the information before. This is from our course page, and just only a small part. So if you're interested to get the whole course, I copy and paste this here in the chart screen, and there you will get also some other stuff, or I would say a lot of more stuff than this in this webinar, because or we have to take a lot of, I think, 1 or 2 days to go through the whole course.
Yes, that's true.
Good. Before we start, of course, the same procedures as every time, the risk disclaimer, so we don't take any liabilities. There is no guarantee for any analysis and selling and buying and everything, Good. Intermediate and advanced chart patterns. Today we go through 2 of them: bearish rectangle and a rising wedge. These are very interesting, I would say, advanced chart patterns. I would say. Good. In general, chart patterns can be a very powerful tool in the hands of a skilled trader. We want to take a look beyond the usual chart patterns and show you the possibilities that will open up to you if you understand formations like the rising wedge or bearish rectangle.
Yeah.
But we will start at first. Before we start, if you have got questions during the webinar, just take the chance, use the chat screen, type in your questions, and we will answer this as soon as possible.
Yeah, I will have an eye on it so that you will get an answer as soon as possible.
Good. We started with the bearish rectangle. The bearish rectangle is a continuation pattern that occurs when a price pauses during a strong downtrend and temporarily bounces between 2 parallel levels before the trend continues. In this webinar, we will show you how to identify the bearish rectangle and use it as a possible selling opportunity.
And the bearish rectangle is also called, or also known as a consolidation or formation.
Okay. I will show you this here. For example, at this example, in this chart screen, on the first line, you see on the top, number 1 resistance line, and then 2 is the support line. As shown, the price falls in a strong downtrend and then starts to consolidate between support and resistance levels. It continues to move sideways, bouncing between these 2 parallel lines and forming a box-like shape that gives the pattern its name. The price then breaks out through the lower support level and continues its downtrend.
So you can see the market goes down heavily, and then the market take a deep breath. So this represents by the bearish rectangle, and then of course the underlying or the asset has enough power to go continue to the downside, and this is here the bearish rectangle.
Yeah. And now the second is, enter the trade in this example. As soon as a candlestick has closed below the rectangle's lower parallel line, the support level, enter your trade with a short sell order. You see on the first line, the resistance line. The second is the support line. And the 3, this is green shaded area, where price has broken support 2. This is very important.
And the closing price, yes.
Yes. And then in the, I would say, orange line, you can see there will be our short entry, the sell order.
Very, very important to wait for the closing price outside the bearish rectangle here.
Yeah. The next one is, of course, after you enter the trade, you have to enter also the stop loss. Place your stop loss just above the rectangle's upper parallel line, the resistance level. There you can see 1, the resistance line, 2, the support line, and 3, the green shaded area where it has been broken. And the red line, number 2, there you should add the stop loss.
And again, it's very, very important to understand support and resistance. This is the absolute basic of becoming a successful trader. You need to know what support and resistance is.
Yes, this is very, very important. So after you place also a stop loss, you have to also place a profit target. measure the height of the rectangle, and then place your profit target the same distance underneath the rectangle's lower parallel line. So you see the orange line, the sell order, where we are short entry, then the red line, the stop loss, and 3, this is the green line, there we shall put the take profit.
And in most cases, the risk-reward ratio is slightly negative, so you earn less than you can risk. But of course, the profitability of this strategy is bigger than 50%, and this is why you make profit with this kind of strategy.
If you click on the link, which I pasted in the chat screen, you will see also the opposite of bearish, or I would say the opposite of bearish rectangle, or the bullish rectangle. Yeah. And there you can see how you have to handle in the bullish rectangle the stop loss, take profit, and the entry orders. Good. Let's come to the next chapter, the rising wedge. The wedge pattern can be used as either a continuation or reversal pattern depending on where it is found on the price chart. There are 2 types of wedge pattern, the rising or ascending wedge and the falling or descending wedge. So we'll give you the example also here on the chart screen. Identifying at first the rising wedge pattern in an uptrend. A rising wedge in an uptrend is considered a reversal pattern that occurs when the price is making higher highs and higher lows. As the chart shows, this is identified by a contracting range in prices. The price is confined within 2 lines which get closer together to create a pattern. This indicates a slowing of momentum, and it usually precedes a reversal to the downside. This means that you can look for potential selling opportunities.
It's a reversal pattern, and as you can see, the lower line is more increasing than the upper line, because otherwise it wouldn't be an wedge.
Yeah, this is very important, correct. So identifying the rising wedge pattern in a downtrend. A rising wedge in a downtrend is a temporary price movement in the opposite direction, market retracement. As in the case of the rising wedge in an uptrend, it is characterized by shrinking prices that are confined within 2 lines coming together to form a pattern. It indicates the continuation of the downtrend, and again, this means that you can look for potential selling opportunities.
Yeah.
Good. So how to handle by the end? Trading the rising wedge. Once you have identified the rising wedge, whether in an uptrend or downtrend, one method you can use to enter the market with is to place a sell order or short entry on the break of the bottom side of the wedge. In order to avoid false breakouts, you should wait for a candle to close below the bottom trend line before entering. So on area 1, area where price has broken the lower support trend line, this is red shaded, and then the, I would say orange line, this is our short entry, the sell order.
And I haven't seen the question yet in the chat box, but maybe for your information, you can trade this kind of patterns, so the bearish rectangle and of course the bullish and bearish wedge on every single time frame. So from minute chart to monthly chart, it's possible to trade this.
Yeah, this is also very important. Yeah, in any time frame. Okay. So the chart shows where you should place the stop loss. This is also very important. This is placed above the top side of the rising wedge. The red shaded area where price has broken the lower support trend line. The orange line, this is our short entry. And then the stop loss is the red line, number 2. You can see this. So we have to also put, of course, the take profit. Finally, the last chart shows the profit target. This is measured by taking the height of the back of the wedge and by extending that distance down from the trend line breakout. So, number 1, area where price has broken the lower support trend line, it's red shaded. Number 2, back of the wedge, it's a green shaded. And number 3, distance between entry, sell order 1, and take profit 3. This is the same height as the back of the wedge 2. This is also green shaded. And then you can see the orange line is our short entry, the stop loss is red, and take profit is green.
Looks nice. Nice trade.
Yeah, that's very nice. So Yeah, these are two examples of the intermediate and advanced short patterns, the Rising Wedge and the Bearish rectangle. The link where I pasted in the chart screen shows you a lot of more, also different methods, yeah, in the Rising Wedge and also in the Bearish rectangle. And I would take, or in my opinion, I would suggest you just take the opportunity, click the link on it, and I think the course is free. Yeah, is that
It
correct?
is absolutely free, and we explain every single pattern with stop loss, entry, and take profit levels. So it's a huge benefit to take this course, and
Yeah.
of course it's for free.
Yeah. If you have got questions, we came unfortunately to the end of the webinar. If you have got questions, just contact us under this email address, support@tradimo.com. There you can contact us anytime. And we would also appreciate if you can send us also suggestions what kind of topics you are interested for.
Mm-hmm.
So for the next 1 or 2 minutes, we are online. So if you have got questions right now, just take the chance and use the chat screen. You can type in there. After the webinar, I would appreciate if you can also rate this webinar, yeah, if that was good or bad. And yeah, just use the email address if you have got some suggestions to make it more better. And of course, on our webinar page, there are also more webinars till to the end of December, and also with very interesting topics. I think one of them is the portfolio management, and the second is the morning star. Yeah.
Yeah, morning and evening stock formation.
Morning
Yeah.
and evening star. Yeah, correct. Okay. Matthias, have you got questions?
I don't have any, sorry.
Okay, good. So I don't see anyone here just typing in. I think we came to the end, yeah?
Yeah, seems so. Okay,
Okay.
then all of you guys, I wish you a nice evening and see you next week.
Yeah, see you next week, and thanks.
With camera again then.
Yeah, with camera again. Okay, thanks. Have a nice evening. Thank
Yeah,
you.
bye guys.
Bye.